schedule.
Go ahead, Dr.
Yeah, we are aware of your busy schedule, and we feel so blessed to have you today. We are going to have an open conversation. It's going to be easy. The idea is just for the young people attending this session to learn, and those who will look at it after to learn from you. Yeah, so nothing way too technical. Feel free if I push you in an area that you're not very familiar with, as we are all learning. Yeah, so it's not about putting you on the spot. It's just about learning from you. Is that okay?
Awesome stuff. And I did have a presentation I did prepare, but I'm happy to take your lead in how you want to structure the discussion.
Yeah, it will be very, very simple. Before I start, I'm going to invite Paul very quickly to brief us on what we are all about for the benefit of those who are joining us for the first time. Paul, over to you.
Okay, thank you, Dr. Julian. My name is Paul Makolaka, co-founder and executive director of Africa Blockchain Youth Ambassadors, or ABYA. ABYA is a Pan-African initiative created to promote awareness, knowledge, skills, and application of blockchain, Web3, and cryptocurrency literacy adoption through African university students. The reason why our focus is on the youth is informed by the fact that Africa's youth make up a significant proportion of the population, but they are often left out of the formal economy and lack access to opportunities. This lack of access prevents them from thriving, resulting in high levels of unemployment and poverty, as well as social and political marginalization. And as a result, Africa cannot reach its full potential. The youth are the future leaders of the continent, and if given the opportunity, they have the potential to thrive. By investing in Africa's youth with future-proof skills, networking opportunities, and other programs, we are not only empowering individuals, but also benefiting society as a whole. These young people have the potential to make a real difference in the world, and we are proud to supporting them on their journey. Over to you, Dr. Julian.
Thank you very much, Paul. That has been very well put. Again, to you, Paul, karibu sana. By way of introduction, I'm your host. My name's Julian Rowell. I am the Director of Strategy and Quality Assurance at African Blockchain Youth Ambassadors, also known as ABYA. I consider myself a scholar practitioner. I really enjoy bridging the gap between theory and practice, having just recently earned my doctorate from University of Liverpool. I enjoy very intense conversations. As much as I like them simple, I'm also a big enthusiast of blockchain technology and the Chief Executive Officer of Schedules Business and Management Consulting, an outfit that intervenes in solving workplace-based problems. So our audience and Tabani, those are my introductions. Today, we are going to center our conversations around DeFi, and again, I will constrain, or I'll restrict my guest today in one of these pillars, but I'll just explain in a bit. So there's DeFi, which is decentralized finance. There's ReFi, which is regenerative finance, and then there's CBDCs, which is central bank digital currency, and for which Tabani is an expert. So Tabani, I'll really lean my conversations towards the last one. I hope that is okay.
That sounds great.
Okay, great. And to our attendees today, you are invited also to engage in this conversation. On your right, there's a place for comments where you can shoot your questions. In the fullness of time, once our conversation with Tabani is as good as complete, we'll introduce your questions as well. So please feel free to indulge us in that. To start with, I'd like to read a brief bio of Tabani. Tabani, your second name is very complicated. I'll see if I can pronounce it right. We are talking to Tabani Vidilingam. Did I get that right?
Close enough, close enough. So it's Tabani by Tillingham.
Let me hear how would you pronounce it? Let me hear it from you.
It's by Tillingham.
Oh, by
Wow.
Tillingham.
Wow.
Okay, that's very interesting. So let me read her bio to you very quickly. Tabani is a market risk analyst, prudential regulator, and a policy maker. She has a master's degree in financial and investment management sciences. Is a CFA level 2 candidate and is currently enrolled for an MBA with the University of London. She was awarded a scholarship by the International Finance Corporation (IFC) and Milken Institute to participate in the 2022 cohort of their Capital Markets Program (CMP) in Washington, D.C. Through the CMP program, she's now interning in the Market Analytics and Research Division at the Algorand Foundation, a blockchain technology company that is at the forefront of the technological innovations that are revolutionizing today's financial market landscape. Now, Tabani, that's a handful. You clearly have a very rich profile. I'm honored to be in your presence today. So again, when I say Karibu, you say Asante Sana. Karibu.
Asante sana.
You got that right. Now, to start us off, we just want to know more about the lady behind the mic on the other side. And just for the avoidance of doubt, where are you calling from, Tabani?
Sure. So I'm right now in Pretoria, South Africa, but I'm actually
Oh, yeah.
heading back to the US on Thursday.
Okay, great. Okay, great. Very quickly, tell us, who is Tabani in just about one or two sentences? Who is Tabani?
Sure. So I think I kind of like what you guys are all about, right? Youth empowerment and just giving people that voice, that platform, that exposure. That speaks very, very true to who I am. And those are key components to a lot of the things that I do. So over and above my involvement at the central bank, the South African Central Bank, I actually involve myself in a lot of community outreach projects as well, just trying to reach out to the underrepresented, the marginalized people of society. So I'm quite excited to be engaging with you. And also with my internship at Algorand. Algorand is all about that. And I think it speaks very true to their partnership with initiatives such as ABYA, right? They want to empower people. They want to give people that exposure. They want to enhance inclusion. So just partnering with both of you guys in this initiative is exactly aligned with my ethos and what I'm all about.
Fantastic. Thank you so much, Tabani, for that. So I'll ask you a very personal question. The name Tabani, from which community and what does it mean?
Okay, interesting. So the name Tavani, so it's actually a silent H. I always laugh about it. I'm like, I don't know why there's an H in my name if you don't need to actually say it. So it actually is a strong Tavani. It's an Ndebele. It's an Ndebele name. And in Ndebele, it actually means be happy. So I guess I try to also embody that often as I can. Just be happy. Simple, straightforward. It's an instruction. Be happy.
Okay. Aware that you've studied abroad, I just wanted to pick your thoughts around your experience studying in London and Washington vis-a-vis studying in Africa. What would you share as your pivotal experience?
Okay, so it was quite an interesting journey, to be honest, because the studies in Washington actually required me to be physically there, whereas my University of London exposure is more online. So being in Washington for the first time, I went there in winter. It was extremely excruciating having to survive a winter. And being away from family, that was a different experience for me. But I think one of the things that comes out is that a lot of the professors that we have not only had academic knowledge and academic expertise, but they also had the practical industry expertise. So when you pair up professors and instructors that have those kind of two backgrounds, it really forms a strong foundation to what you're teaching people. And that's one of the things that I actually found to be slightly different to my experiences, I guess, vis-a-vis studying in South Africa, where I've studied most of my life. So very, very interesting experience and exposure. I guess it opens your eyes a little bit more, right? Not only did I study in the US, I also got a chance to work in the US and get an exposure to how a US company in the private sector actually works, how they function, how they think, and trying to use a lot of those tools and a lot of those experiences as I go back to the South African Reserve Bank shortly. And and to enhance what the South African Reserve Bank actually does through all of those experiences.
Very, very interesting and enlightening. Trevor Noah speaks about serious shocks working and living in America. Culturally, have there been any shocks you've had to endure? You're laughing now.
Oh, yeah. I think one of the shocks for me, right, is that coming from, I guess, Africa and South Africa, we always have this impression of how glamorous it's going to be out in first world countries. And I got to live in the capital city of a first world country for a while. And I was quite humbled to see that there's actually quite a lot of similarities in that poverty is widespread. So even in a first world country, you will get confronted by poverty right as you step outside of your door. And that for me was a bit of the cultural shock component, where you just find homeless people just finding a park, even in the center of a city like DC, just building their little tents and just living in those kind of environments, something similar to what we see in South Africa with the squatter camps and stuff like that. So that for me was a familiar culture shock, if that makes sense.
Familiar culture shock. Yeah, it's tough everywhere. Prosperity is shared globally, so there's nothing so special from one continent to the other. It's just about us having the brilliance of getting it. Would I be right to say that, Taban?
That's right.
You'd agree with that?
Spot on.
Okay, great. So let's dive a little now on the subject of the day. Market risk analyst, prudential regulator. That describes you, am I right?
That's correct. Yeah. Yes. Professionally, yes.
Yeah. What does that entail when we say a market risk analyst? And you can put it in the context of what we will be discussing today. When you're talking about a market risk analyst and when we talk about a prudential regulator, to our viewers, what should that look like to them? What do you do?
Okay, so within the South African Reserve Bank, there is a subsection called the Prudential Authority. And what the Prudential Authority aims to do is actually supervise banks, financial institutions, insurers, those kind of entities. So as a market risk analyst, I actually look at the exposures that these entities have to volatile instruments. So ultimately, what are these entities doing with investors' money? How much risk are they taking on in the attempt to generate profits and income for themselves? So that's where the market risk component comes in. I actually have frequent engagements with banks, all the big five banks you can think of in South Africa: Standard Bank, ABSA, Nedbank, including the local branches of foreign banks. So if you think of the JP Morgans, those kind of entities that come and operate in South Africa, as long as they're taking on some sort of risk by investing in derivative instruments, we as regulators and as the South African Reserve Bank need to actually monitor to what extent they're taking on those risks. Are they within limits? Are they limit breaches? And we have those kind of discussions with them as we supervise. So I'm actually a supervisor underneath it all, and I supervise the market risk element within these entities. And then from a prudential regulator perspective, there is the BIS in Switzerland. So the BIS is actually responsible for a lot of the global regulatory frameworks that the banks have to kind of comply with across their different jurisdictions. And so as the BIS and the BCBS release these regulatory frameworks, us as local regulators actually have to implement these frameworks. And that's where the prudential regulator component comes through. When these regulations are promulgated at a global level, we then have to implement them and make sure that they're fit to purpose for our jurisdiction. And that's another big one of my areas of assignment at the Reserve Bank, as there are a lot of regulatory changes going on, and having to implement them and make sure that they're sound, that they're resilient, that they actually enhance the financial stability of our system. So yeah, that's where I fit in with those two pieces of mine.
Okay.
Yeah.
And am I right that you're also engaged or involved in one way or the other with policy?
That's right. Policy and regulation, that's we just interchange those terms. We use them interchangeably. That's right.
Okay, I get it. So I was having this conversation with some of my critical friends the other day. There's a certain concept I'm trying to develop, and I'm looking at the aspect of policy around that. Mm-hmm. So I asked this critical friend, could you share some of the documents you have on policy development? And a lot of what they shared with me was on policy analysis, I asked for policy development frameworks or literature that can guide me with that, but they shared a lot around policy analysis. So I asked the question, oh, wait a minute, you've given me policy analysis related question. Is there no difference between analysis and development? And then he goes and says, there can be no development without analysis. So I'm just trying to understand from a lay person and as an expert, what is the difference, if any, so that we know how to confront this subject when we need to?
Absolutely. So I think they are almost like subsequent events to each other. So I think your colleague rightfully put it. You first need to actually analyze, as I was mentioning, when the BIS and the BCBS release the international framework, you need to take that thing and actually analyze what is it trying to achieve? Is it feasible in your jurisdiction? Once you have analyzed all those different components, that's when you develop your specific nuanced policy for your jurisdiction. So you first need to analyze the international framework, the international policies, and see which pieces you perhaps want to emphasize a bit more in your jurisdiction because you're more susceptible to certain risks. Where some certain components are not applicable to your jurisdiction, if it's not advanced to that level yet, you may want to exclude certain pieces. And once you've established your own sort of mold of the policy, that's when you actually go and develop it.
Oh, they're very, very interesting. So I'll be talking to you on the side so that you can also guide me on some of the literature that I may need to read. But that the way you have explained it, that has come out very, very well. So now let's come down to your area of expertise. But before I go there, Mr. Paul Makolaka, are we on the right track?
I'm enjoying myself.
You're enjoying yourself. Are you learning something new?
Quite a lot. Quite a lot.
I'm happy to hear that. I'm happy to hear that. Now, Tabani, it's Tabani, not the Bani. So Tabani, I will now take you to your area of expertise. CBDCs, also known as central bank digital currency, CBDCs. What are they?
Right. Okay. So let me give you a bit of like I guess an overview of where they come from, right? So over the centuries, central banks have held the traditional reputation of being the last to come to the party and being slow to adjust and adopt to any changes and developments in capital markets. And I guess this modus operandi is unfortunately still persisting through the financial revolution that we're experiencing globally, which is brought on by Web3 and the digital asset ecosystem. So most jurisdictions are taking a more careful and prudent approach to their CBDC design and implementation by setting like broad parameters for their CBDC models. And I guess the sentiment of central banks around their CBDCs, which I'll explain in a minute, is we don't want to be first, we want to get it right. And as with other digital currencies, CBDCs are a form of digital money that can be used to facilitate payments, right? So CBDCs is the digital form of a country's fiat currency that is also a claim on the central bank. So instead of printing fiat currency as they currently do, central bank would issue electronic money or accounts that are fully backed by the central bank and as such would be considered as legal tender. So I guess that kind of gives a bit of an outlay of what a CBDC is. It is ultimately a digital currency, and rightfully said, it is a central bank digital currency. So you've noticed that there's been a lot of other issuances of CBDC, of digital currencies over the years. Central banks now want to play in that arena as well and are introducing what is known as the central bank digital currency.
Interesting.
Oh, yeah, sure.
You wanted to say something. Go ahead.
Yeah, I was going to say, I can elaborate that there's perhaps even two different types of CBDC models, if you'd like me to go into that a little bit as well.
Please do.
Sure. So there are primarily two types of CBDC models that central banks are exploring right now. So there's been a lot of activity around exploring and piloting, just trying to figure out, as I said earlier on, the concept of fit for purpose. What is a certain central bank trying to achieve when it's deploying a CBDC? So with that in mind, there's a wholesale CBDC and a retail CBDC. So each one would have a unique blend of characteristics and as a result would serve different purposes. So for example, the wholesale CBDC would only be used by regulated financial institutions or other central banks. And wholesale CBDCs are therefore intended to settle interbank transfers. On the other hand, Retail CBDCs would be issued to households like you and I, businesses, and other private sector entities. And these would serve as a tool for settling payment transactions. So retail CBDCs offer universal access, right? Similar to cash, as they would be available to the general public. And these would therefore be ideal for central banks that want to promote that financial inclusion agenda that we kind of touched on at the beginning of our discussion. So yeah, those are the two types of CBDCs, and it's a bit of like understanding of what it actually is.
Okay, Tabani, we already have electronic funds transfer and real-time RTGS, real-time. I'm trying to remember my banking. I'm a bit still in it, but we already have these instruments out there that you could call digital.
Yes.
And then we have mobile money. You talked about retail CBDC, and we have mobile money. For example, you will be aware that in Kenya, of course, it's not central bank controlled, but you'll be aware that in Kenya we have something that's very popular in the name of M-Pesa.
Yes.
Now, make me understand the difference between what I've just explained with the concept that you've just spoken about.
So great. I was actually listening to colleagues of mine, and we're having debates about what are the actual differences between a lot of the other digital forms of money and CBDCs.
Okay.
And for the most part, they actually have a lot of similarities.
Okay.
And so, as I mentioned earlier on, the CBDC is actually the way the central bank wants to remain competitive and relevant in this digital world. Because what's coming up now is that their fiat currencies, their fiat money is becoming somewhat irrelevant because there has been so many digital currencies and other forms of digital money. And to maintain their relevance in a digital cross-border payment settlement landscape, central banks are now feeling sort of urged and, persuaded to go down the CBDC route, even though there is, like you mentioned, a lot of similarities and a lot of, lack of clarity in terms of what is a CBDC actually going to do that's different from a lot of the other digital payment options that are available. And unfortunately, it is not too different from what you currently have. It is just the central bank's way of trying to maintain its competitiveness and relevance in that landscape. And that's why you're finding that they've been a bit slow in their implementation because there is already so much competition. Citizens are more aware, are more alert, they have more bespoke needs. And there's so many alternatives now to what a central bank could have done for you in the past, where there was almost like a monopoly in terms of currency. And CBDC is just a way of central banks just coming to the party and trying to remain competitive and relevant in this space. And I guess they're feeling threatened as well, right? With all the digital innovations and these digital currencies that are, rising and falling all around us. It almost becomes a question of, okay, so where does the central bank and its currencies and its notes, coins, and everything that's in circulation and all that M1 to M7 that they used to typically issue, where's the relevance of all of that stuff, right? And I guess now CBDs are trying to come to the central banks are trying to come to the party and offer their own version of similar use and similar benefits. So there are some benefits, and we can touch on those a little bit later if you'd like, that CBDCs can actually introduce. But a lot of those benefits actually lie for the central bank itself, like I was touching on now, trying to remain relevant and maintain their dominance. So for example, the US, right? With the invent of the EU1, which is China's digital currency, China really took on the CBDC race and was quick to develop and implement theirs. And what's coming out is that this digital yuan is actually taking over in the digital cross-border payment settlement system and landscape. And now with the dollar, if it only remains as fiat currency, that dollar dominance as we know it can actually end up being threatened by innovations such as what China is doing. And historically, as you know, there's a lot of turmoil and history between the US and China. And China would actually have those underlying motives and incentives to want to sort of overthrow the US dollar dominance in the global financial system. So it also becomes an inter-jurisdictional competition to stay relevant, to avoid dollarization, where your currency, if you keep it in its fiat physical form, becomes obsolete or irrelevant, and people rather use a digital yuan, for example, to settle payments in Kenya, for example. So they need to actually upscale and introduce their CBDCs from that perspective.
Very, very interesting. And I'm going to pull in Paul for a minute here. Paul, for just a minute or two. I know you're a big enthusiast of CBDC, and you've had the last conversations or arguments that Tabani has put over vis-a-vis, what the twist have tried to bring to it. What's your take on this? CBDC and yeah, go ahead.
And actually, just this afternoon, I was attending a blockchain event somewhere in Westlands, and we're having this great conversation. And of course, these conversations always ends up like, they are what we call a crypto maximalist, who imagine that a time will come when, crypto will take over and banks and the financial institutions will disappear. Now, for me, that is not my school of thought. My school of thought is that, they say that variety is the source for life. So we need to have variety.
Yeah.
And for me, I think what blockchain has done, it's just that, it has brought, variety so that people now have choices. Communities can decide to have their own community inclusion currencies. A section of people can mobilize themselves, and they can decide to have their own token that they put value on it. So, but I don't see a situation where the banks will just disappear overnight. Because you see, again, I always remind these crypto maximalists that, for example, with in traditional finance, when things go wrong, the regulators and social laws, but in a decentralized network, who will be there to socialize the losses? Nobody. So we still need the banks. And though, again, when it comes to the issue of CBDCs, of course, it always there are always pros and cons. Yeah. And one of the things that really gives me shivers is, for example, if you had sort of tyrannical leaders at the helm of, let's say, a central bank, and they have implemented a CBDC, and the CBDC can give very, very infinite and very covert capabilities, very overt capabilities to the central bank, in the sense that, for example, let's say they can say that, because you see it is programmable money, they can say that, for example, today, if we inject this amount of money to the economy and it is targeted to a specific group of people, they can go ahead and program it and say, for example, you cannot spend this money on certain items. Those capabilities can be there. And, so these are some of the things that, we have to, deal with. But of course, it also has a lot of benefits, especially to the regulator and also the consumers. Thank you.
Thank you, Paul. Tabani, I'm back to you.
Sure, thanks. And thanks for that, Paul. You sound like a very concerned citizen, and rightfully so, right? And there was a few points that you touched on there that I was hoping to also just touch on again. You spoke about you not envisioning a world where perhaps commercial banks become obsolete, or they disappear, or they become marginalized, right? And that is one of the concerns that they're currently facing, and rightfully so. If you think about when you transact with a commercial bank, right? Sometimes when you want to make a payment, whether it's somebody who has a different uses a different bank in your country, or you're trying to pay somebody who's in Tokyo, for example, right? It takes 2 to 3 days for those transactions to clear. What these digital asset and this digital asset revolution is providing, and what CBDCs and other digital currencies are providing, is what is known as transactional finality, where these transactions get settled within 2 to 3 seconds, not 2 to 3 days. And with some blockchains like the Algorand protocol, these transactions actually get settled immediately. So imagine a world where you can now send your brother who's studying somewhere else and has an emergency and needs funds immediately. Do you want to approach your traditional commercial bank to do this and take 2 to 3 days to assist somebody in an emergency, for example? Or would you now want to approach these digital currencies, the way the transactional finality can be instant due to what is known as smart contracts, right? Then there's another component where I guess over time, the financial system became somewhat monopolized by certain or few institutions. And as such, there's very high transactional costs. We didn't perhaps see it and feel it all along, but I guess the marginalized, underbanked, and underbanked would actually attest that, you know what, these transactional costs are too high. That's why I don't use conventional banking systems. What the digital asset landscape actually produces and offers people now is reduced costs of these transactions. So where you were unable to bank and unable to access certain financial products in your commercial banks and commercial financial institutions, that reduced cost actually makes it more attractive now for you to join in a digital financial system and benefit from these reduced costs. I love what you touched on, just one more piece, in terms of financial distress. You spoke about the decentralized component, where currently, if a central bank is under distress, for example, you know where to go, right? There's a physical place, you know where to go. And I think that was one of the things I'm also eager to see and discover as the CBDC journey and discussions mature, and we actually start to see concrete implementations of frameworks around CBDCs. We currently have what is known as deposit insurance, which is kind of what you were touching on, where you can actually go to your bank and when it's under distress or there's a bank run, there's a pandemic, there's some sort of panic, and whether the commercial bank has your funds or not, there's ultimately a fallback underneath as well, which is your deposit insurance. What we don't know at this stage is when these CBDCs are going to be implemented, are they going to be implemented with the same infrastructure around them, with the same sort of security and support to say that, okay, it may be decentralized and you don't know who's on the other end, but your central bank can actually back your deposits, unlike other digital currency. So that may be the kind of plus on the CBDC side, is that it's going to be backed by a central bank. And the central bank can actually implement deposit insurance such that your funds are somewhat more secure than with other digital currencies. Yeah, thanks.
Interesting. I'll come back to you on that in a minute. We'll take a short break, a commercial break. Where
Enterprise
now Paul will tell
blockchains
us
have
something.
limitless potential, but privacy is a major challenge. How can businesses secure their private transactions on a public network, especially when enterprise blockchains have been closed, unaudited, centralized? Introducing Polygon Nightfall, designed for the needs of enterprises. Nightfall uses a hybrid approach to scaling to give enterprises an option that was considered impossible. ZK rollups keep transactions private on a public network. Optimistic rollups offer efficient, scalable transactions. Secured by Ethereum, Nightfall means trust, transparency, and credibility. Aiming to disrupt the $50 trillion global supply chain industry, Polygon Nightfall unlocks the true potential of enterprise blockchains and empowers businesses to connect and scale in powerful new ways. Polygon Nightfall. Mainnet beta is now live.
For those of you who may not know, Polygon is a layer 2 blockchain that aims to help Ethereum with its scalability by acting as a layer 2 protocol. Polygon doesn't aim to duplicate Ethereum's functionality. Instead, it helps improve transaction speeds and lower cost for developers. Now, Polygon is one of our partners who believe in what we are doing to empower university students in Africa. Back to you, Dr. Julian.
Thank you very much. Tabani, that was a very good rebuttal that, or rather addition that you made to the arguments Paul made earlier. Very, very insightful, and we're getting such beautiful comments on the commentary section. I'm taking it that our audience are really gaining from some of the contribution that you're making here this evening. I'll take to this next question. Looking at the retail CBDCs, just looking at that component, the personalized one, I think you called it the household bit. In your mind, if and of course, unless it has already been conceptualized, how does that work practically? Just give us a snap preview of how that would look like, and take a very layman view to it.
Sure. So as we mentioned earlier on, right, with the retail CBDC, and in my opinion, the more attractive option in terms of CBDC versus the wholesale one, you would then actually use these commercial banks and financial intermediaries that Paul was alluding to earlier on, that they won't disappear. That's what part of the political considerations are going to be for central banks. You don't want to implement something that is going to disrupt the financial stability of your financial system. So by actually implementing something such as a retail CBDC, the central bank would issue it, but it would actually hand over those issuances to these financial intermediaries and commercial banks, and they would then liaise then with the businesses, the personal people like you and I, and the private entities. I guess also part of the CBDC, the retail CBDC appeal for a central bank is that they don't have the capacity to actually hold, or certain jurisdictions, I know South Africa, for example, they're looking at a retail CBDC, where they don't have the capacity to actually be the facing entity when it comes to those issuances. You want to hand it over to an intermediary who then facilitate the distribution and access to your CBDC. That way, you're kind of covering two pieces. You are ensuring the sustainability of your pre-existing financial infrastructure. You're ensuring the sustainability of these financial intermediaries, but you're also playing in the system as well. One of the things I just wanted to touch on, and maybe it's a bit off field, but as I was researching during my internship at Algorand, we're coming across jurisdictional differences where some want to implement the retail CBDC, others perhaps want to go wholesale. And one of the questions that was coming up in my mind, if I look back historically, when we've implemented, new innovations, frameworks, policies, and there's jurisdictional nuances, those jurisdictional nuances can result in loopholes. So what's coming up in my mind right now, and it hasn't been tested, it hasn't manifested yet, is if there's a jurisdiction that is implementing a retail CBDC and has its own standards and framework under which it implements it, where another jurisdiction is implementing the wholesale version, can they be interjurisdictional loopholes? Can they be regulatory arbitrage where, users of these CBDCs can see that, okay, well, if I use this retail CBDC to do this, that, and the other, and maybe convert it to the wholesale one to do this, that, and the other, I can actually sort of like bypass certain components and benefit from that. So just another piece in this whole retail versus wholesale discussion that we need to look out for as these developments mature. But ultimately, as I said earlier on, the retail one would actually be handed over to the financial intermediaries, and that way it then doesn't touch on the concerns that they would have been raising about the CBDC issuances, that threat to their profitability, their ability to generate revenues, their credit facilities. All of that stuff will then be transferred to them, and it almost feels like it'll become a seamless integration into the financial ecosystem.
That's very, 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 very well put. So if I said CBDC is about money supply and the movement of money within a digital ecosystem. Mm-hmm. Would I be near the truth or far from it?
Yes, I believe you would be. In certain instances, certain central banks need to actually determine whether their CBDCs are going to replace their fiat currencies, or they're going to run two parallel streams, and having to control the money supply and the economic effects of that, the inflation and all that kind of those components, if they issue both of them. If the supply goes too far because you're issuing CBDCs without consideration of the fiat that is currently in issuance, you need to consider that. Or are you going to start scaling back fiat and replacing that with CBDC? Another piece of the discussion that one of my professors at George Washington was actually talking about. How are you going to do it? So the supply is indeed, it's a digital supply, but in that digital supply, are you replacing some of your fiat, or are you actually increasing the overall issuance of your central bank?
Okay. Interesting. So interesting. My next question to you again, Tabani. Where are we in the development or the deployment of CBDC? From where you sit, you can look at America, or you can look at the globe, if you could, and then narrow it down to Africa. Where are we at in terms of development and deployment?
Okay. If you give me a second, Julian, I actually have a map that I can actually show you. In terms
Please do. Go ahead.
Yeah.
It may take me a second, but I do have something I could share with you.
I'm happy for you to share, please. Take your time.
Okay, I'm new to this StreamYard, so it may just take me a second. I'm using multiple screens here, but
Paul will help you.
Let me know if you're seeing something on your end, which actually speaks exactly to your
Yes,
question.
I'm seeing. Let me just add it. Sorry, let me just add it just a moment. Yes.
Yeah, we can see it. Brilliant.
Right. So this map actually shows exactly what you're asking about. And I actually downloaded this one on Friday. So it's actually the latest one. And it's kind of showing where we are globally in terms of CBDC implementation. And you'll find that I think that from an African perspective, the one in the purple is Nigeria. So I think Nigeria is the only country on the continent that has actually fully launched its CBDC. Then you find that other jurisdictions are in pilot mode, others are in development mode, research, some of them are actually inactive, they're not interested. And we can touch on a little bit of that as well, where if a jurisdiction is not interested, but they want to stay relevant in the ecosystem, what can they actually do? But this is actually the map. So from a South African perspective, I can speak to my own jurisdiction. We are in pilot mode. Not only are we piloting our standalone CBDC, we're actually participating in a multi-central bank digital currency pilots as well with other jurisdictions, such as the Monetary Authority of Singapore, I believe, and Australia as well is involved in that project to develop our CBDCs. So yeah, Nigeria is actually leading the way from an African perspective, but I also go back to my initial statement where I said some central banks are not trying to be first at implementing the CBDCs. They want to get it right. And to get something right at some stage, you do actually need to take a slower, more careful, more prudent approach in what you're doing. I guess I would also speak to why it surprises us that countries such as the US and jurisdictions such as the EU haven't actually implemented their CBDCs. They actually want to make sure you get it right the first time, because with this evolving digital asset ecosystem, you don't want to find yourself as a central bank having to readjust and amend your CBDC. You want to make sure that it is done structurally sound, but it is resilient to any changes and evolutions that the digital asset landscape is going to introduce. So we're eager to see how the Nigerian implementation rolls out over the next couple of years. Are they going to actually perhaps adjust it, or is it actually sound from the get-go into all infinity? So this is the CBDC implementation. And I think what also speaks to is that, unfortunately, on the African continent, you can see that there isn't a lot of activity around it. And it's kind of concerning knowing that the digital asset landscape is really agile. It's really, evolving constantly. And the more that central banks stay behind in terms of implementing, in terms of joining in the arena, the more they're going to get dollarized, right? Where other central bank digital currencies are going to dominate in the jurisdictions. I know there's some research that's going on, trying to figure out what are some of the challenges that the central banks in our continent are experiencing that is stopping them from actually getting on board, at least starting your research, even if it's a cost or a capacity constraint, get on board and start your journey somewhat, because it's not a journey you're going to get right within a year. As you've seen, certain jurisdictions, we've been trying to implement CBDCs, or at least started our journeys many, many years ago. And it's still many, many years to come before we implement. So the sooner the country gets on board, starts, experimenting, doing their piloting, doing their test drives, parallel runs, the sooner it's going to allow itself to stay relevant in this ever-changing global landscape.
Amazing. Really, really, really good stuff. Paul, give us a very brief status report of Kenya, development and deployment. What's our status as a country, Kenya? We've heard about South Africa, we've heard about Nigeria.
Yes, Kenya, actually, the central bank invited the public to give their feedback in terms of, implementation of a CBDC. And I think that call for feedback from the public closed in June this year. So we are waiting to see now, in terms of their roadmap, what they are going to do next.
Mm-hmm.
Interesting. But we are far behind Nigeria, clearly.
Of course, clearly we are far much behind Nigeria
and South Africa.
Yes.
Maybe we should relocate Tabani to Nairobi.
On the upside, you're not one of the countries that have cancelled their CBDC developments. There's a few on the map that have actually cancelled, which means they started something, they started their research, and they said, no, this is not feasible for us. So as long as there's still that hope, that's a good sign, guys.
Okay, great. So I want to put it to you, Tabani, that CBDC, which is central finance, and crypto, which is decentralized finance, are in conflict. I want to put it to you that they are in conflict. One being democratic, because the crypto is democratic, peer-to-peer. I deal with whoever I choose to deal with. My data is protected. And then you have one that is managed by a central agency. Mm-hmm. What would be your comment to that? And is CBDC, after all, a good idea, given that crypto is coming anyway?
That's right. I would firstly agree with your statement. I feel like, unlike a lot of the other digital assets, CBDCs are not designed to be anonymous. This is actually to accommodate the anti-money laundering objective and the need to monitor fraudulent activities and other irregularities. You just touched on something now, which kind of gave me heebie-jeebies when you mentioned, I want to deal with whoever I want to deal with and do whatever I want to do, whatever I want to do. That is a central bank's nightmare, because we want to know, especially when people start doing divergent activities, anti-money laundering activities, all of that kind of stuff. One of the things that comes to mind is if you look back at the Russian war in Ukraine.
Yeah.
So what that war kind of showed us, right, is that these digital assets can actually be used to evade sanctions, to actually support and sustain war initiatives. Mm-hmm. And that is because there is that kind of decentralized component to it. We don't know where the money is coming from, who's sending it, all that kind of stuff. So with the CBDC, we're trying to mitigate against adding into that kind of darker side of the web of digital assets, trying to have it more transparent. And I guess that transparency and data privacy is a concern to citizens. How much of my data and my privacy am I willing to now give up to a government, to a central bank? How much do I want them to know about what I'm doing with my money? But that is actually ultimately part of the framework of a CBDC, to avoid all of those kind of pockets and, people taking advantage of the I can do whatever I want to do with my money kind of mentality.
Interesting. And again, I'm going to provoke Paul here with a very brief comment. Paul.
Now, Dr. Julian.
Just a minute.
Based on what?
Just a minute. Is central bank, can you hear me?
Yes, I can hear you.
Is central bank being reactive? And are they coming late to the party, Because I'm thinking Tabani and her team are coming late to the party. What's your view on that?
In fact, I'll begin by reacting to what you've just asked me. The central bank, trying to come up with CBDCs. This is just my humble opinion.
Yeah.
Is that the real reason why they are going into CBDCs is that they really don't have a choice. Because if you ask me, and please don't misquote me, the financial system is like a big pyramid scheme, which is, it's a big bubble that is just waiting to burst. With the debt, with the public debt, the central banks have been digging a hole that has no end. So the CBDCs is the only option, is the only light at the end of the tunnel for them. So for them, this is not really an issue of, that whether they like it or not. This is the only option they have to get out of this big pyramid scheme that has been dug for many years that has no end to it. Number two, when Tabani raised the issue of money laundering, now, we've had this discussion in very many forums, and Tabani probably allow me to say this, that this is a scapegoat that has been used by regulators to stifle innovation in this space. And as far as I'm concerned, it's an old one that has no merit. And the reason why I say it has no merit, the latest report as of 2020 indicated that when it comes to illicit financial flows, crypto only did about 3%. Fiat currency did more than slightly above 5%. Yeah. So if you compare those statistics, so it is not really true to use this reason to say that crypto is being used for illegal activities or is being used by criminals. That's a fallacy that I think the regulators have been meddling, to try and to use to fight a crypto space. Now, number three, a public protocol like let's say Bitcoin or Ethereum or Algorand, the kind of transparency that they have, even the centralized systems cannot match. They cannot match, because today I can go to Blockchain Explorer, put an address on it, and it will just bring me all the transactions that have been done on that address. I can see where the money has come. I can see the money that has come, the money that has gone. So, and then also, there are tools that are already available. For example, to query and to be able to actually trace whether money has been transacted to illegal activities or not. And that is how, for example, some time back, FBI were able to shut down a Silk Road because of this being able to track how money was, even though they were using crypto, but they were still able to track it. Today, the international police like Interpol, there are those addresses that have been put on the blacklist, on watch list, so that if money comes to this address, they take action. So it is not really true that the way you put it, that that crypto really promotes this. Of course, when you generalize the entire space, it's like throwing the baby with the water, and that is unfair.
Okay. Okay, Paul, can I jump in?
Please, back to you, Doctor.
So we are actually agreeing that there's a conflict. The finding of this part of the conversation confirms that there's a conflict between CBDCs and crypto. And I'll bounce this question off to Tabani. Tabani, the market intelligence as a market risk analyst. Now put on that hat and tell us, what is it saying about the conversation we've just heard?
Actually, very interesting perspectives that Paul has shared over there, I must say. And I think what I was going to touch on, right, is that I'm not necessarily generalizing that all cryptos and digital currencies are going to be used for illicit activities. What I was saying is that the CBDC design and the structuring of them is to try to mitigate against those components that have emerged somewhat in other digital currencies. The benefit of central banks coming to the party late, as we've put it, is that they have now been able to observe a lot of these developments as they actually manifest. And when you're now designing your CBDC, you're trying to ensure that you sort of root out some of these components that you've observed in non-central bank issuances. A central bank issuance needs to stand, it needs to be resilient, it needs to be trustworthy. And in designing a trustworthy instrument, you need to remove that component of decentralization. And that's what I was touching on. Not necessarily that all digital currencies are, fraudulent and illicit or incite illicit activity. Not at all. In fact, there was a Loomis-Gillibrand bill. So this was in the US. It was issued in July 2022. And it is actually known as the Responsible Financial Innovation Act. And what that act actually reveals is that that government is encouraging at least things like stable coins. They see the value in dollar-denominated stable coins and wanting to promote the development of those. So quite a contrast to the perception that central banks and governments don't want to promote digital innovation. There's certain pieces of the ecosystem that they're actually encouraging, and they see the value of these things. And that bill definitely echoes that sentiment.
Yeah, that brings a lot of clarity to this argument. I guess it will still take us time for all of us to get to a place of convergence, as everybody is trying to get their space. I'm imagining the central bank is also just trying to get its space, as of course the undisputed regulator of the financial space in any jurisdiction. And you can fully understand why they would be very, very involved or want to get involved. I'm liking a comment from one of the attendees that is saying, are CBDCs the regulatory reaction to an inability to police cryptocurrency? Those are just some of the thoughts that are going. Tabani, this is amusing, right?
Wow.
Somebody else is asking Paul to deconstruct the government. So when we say the government, what exactly do we mean? And somebody's very impressed by what's happening in Russia. And there's also the question from James Kimani. Your advice on a regular banker. Me as a regular banker, should I be worried with the emergence of CBDC? Personally, you've given me comfort that there's nothing to worry about. Would you like to add a comment to that, Tabani?
I guess one of the comments that I would just, put out there and have people consider is, not everything is created standard, not everything is created equally. So you can't just hear a CBDC and then think it's sound just because it's being issued by a central bank. You actually just need to actually look at the model and the design of these CBDCs. Because as I touched on earlier on, some of those nuances can actually lead to regulatory arbitrage. They can lead to a weaker CBDC. So if they're not having like the depositors insurance and certain components that come with the design of a CBDC that increase its resilience and stability, then a CBDC is just going to be as good as another digital currency if it doesn't have some of those components. Don't be fooled by a name if you're not going to look deeper and seeing the underlying pieces, the mechanics of it, and seeing how it's implemented, what its structure is. That's going to be an important consideration before you actually, convert some of your own money into a CBDC and hold wallets in that regard. So just do a bit of research. And I think that's the benefit of the world we live in now, right?
Yeah.
We have so much access to technology and so much access to information. And as much as central banks are a bit opaque in terms of giving information around their operations, there are certain, papers and releases that they do try to give to the public to try to get that buy-in, because that's what they're going to need. They're going to need a buy-in. And if you're trying to elicit buy-in, you're going to have to just detail what your CBDC is about, the research you've done into it, the piloting, the parallel runs, the structure, the modeling of it. You're going to have to actually share that with the public at some stage. So I think I encourage people to don't look at the name, go into the underlying, open up the bonnet of the thing and actually see what's underneath it before buying into something.
Thabani, you're a huge depository of knowledge and a big source of pride for us. We've learned so much from you in that 1 hour. We've had a very intense conversation. There are places where we may not agree, but overall, we've generated more knowledge, forcing us to go back and check a lot of what we already know or how we understand it to just better ourselves in fully understanding the subject that we are trying to tackle today. So first, I really wanted to say a very, very big thank you, but I'll not let you go without asking you my final question. What would be your advice to the young people listening to you, and what kind of resources would you lead them to so that they can gain as much knowledge as they possibly could in the subject of your expertise?
I think, yeah, that's a very good question. And I think if I look back at my own journey, right, I came from a central bank and we're trying to issue our own CBDCs, but getting involved in a blockchain actually opened up my eyes quite a lot. And what I'm realizing as I was going through my internship with Algorand is that entities like that are so eager to upskill the youth. And so I encourage people to have the initiative to reach out to entities like that. Whether you want to do some research that you feel like, okay, you know what, having looked at that global tracker on CBDC development, there's actually untapped pieces on our continent that I could do a bit more research in, whether it's in my jurisdiction alone or if I partner up with somebody else from another jurisdiction. You can actually get grants even, right? Grants will actually give you access to money, to funding, to do research, to empower yourself with knowledge. But over and above that, there are a lot of, events that are going on. I know some of my colleagues from Algorand are actually flying down to Kenya today, actually. I think Ethereum is having an event out there. Get involved, right? Raise your hand, volunteer for certain things, attend webinars, get involved in DAOs and just explore. That's the beauty of what's happening right now. You're not going to be too old or too late to the party to get a digital asset account, right? One of the best ways to learn, and I said this before, it was a bit controversial. It's easy and it's fun to attend webinars and discussions and to read. One of the best ways and the most powerful ways to learn is to actually invest your own money in these digital assets, in these digital currencies. Find some that appeal to you, but by having your money where your mouth is, so to speak, that forces you to learn a bit quicker because, okay, your money is at stake. You want to know and understand the space a bit better. So that's one of the controversial pieces of advice I always give. If you lose your money, I'm not a depositor insurance. I can't back your money, but it's a great learning experience. And that's one of the things I always leave people with. Put your money in, get involved, Yeah.
It was such a delight talking to you. And for me, as the host of ABYA, I just want nothing but the best for you, even as you pursue, furthering your knowledge and your studies. And for the humility just to give us an hour of your time, we are forever indebted. And I'm looking forward to meeting you again sometimes in the future, Thabani. Thank you so much.
And again, Paul, thank you so much for inviting us and for reaching out to Algorand. And I think that's the beauty of things like this. They're so willing to help and to participate. So if you guys have any more events in the future, please do reach out. I think you maybe reached out to Doro, if I'm not mistaken. Guys, really great initiative, great platform. It was a pleasure engaging with you. I've learned a lot myself, so I'm so grateful to have engaged with you guys. And
did you have fun? Because I had fun. Did you have fun?
Absolutely.
Okay, Paul, your last words, Paul, and then we call it a night.
To Tabani, we are very appreciative of your time to come and speak to our viewers, and all those of us who are following us online. Thank you very much for tuning in and being part of this discussion. Tabani, we look forward to more such kind of discussions, you and your team, and we wish you all the best. Thanks everyone who was part of this. Kwaherini sana. Asante.
Bye. Bye, Tabani. Talk to you soon.
Thank you. Bye,
Okay,
guys.
bye, Paul. Okay, bye. Thank you. Bye.